Hello everyone, it's Mark Pruitt with Strategic Estate Planning Services. Please hit the subscribe button below to stay informed with our market updates. I wanted to reach out to you and give you an update for October on what we are seeing and hearing and reading regarding markets, interest rates, the overall economic conditions, throw in a historical Speaker of the House removal, a 45-day national budget, the choosing of a new speaker, the 10-year Treasury note hitting highs along with wars, just to name a few things. It makes for a very interesting October to say the least, so let's get to it. First, the Federal Reserve has tried to get the markets and investors to accept that interest rates are going to stay higher for a longer period of time. That is now being realized and is affecting the markets and investors. My opinion is we may still see a potential rise in interest rates one more time in December, with the potential for the Federal Reserve to hold interest rates well into next year. I have stated all along that the Federal Reserve ran up that interest rate mountain as they raised rates aggressively, and I also stated that they would hang out at the top of that mountain, so to speak, and would eventually take a slow walk down once they decide to slowly lower interest rates, we hope, sometime in 2024. As a population, getting used to a more typical or higher interest rate structure doesn't sound like such a terrible thing, but after 15 years of living in an unnaturally low rate environment, normal sounds, well, abnormal. The bottom line is, with the 10-year Treasury is yielding towards 5%, which is the highest it's been in years, it simply makes the cost of capital, for example, borrowing for things like homes, loans, car loans, refinancing credit, they're going to continue to be at a higher rate. Combine all of that with August job openings climbing to over 9.6 million, which was more jobs than need to be filled than expected, and only 35,000 of those openings were hires. The Federal Reserve looks at job openings as a strong labor market because companies are trying to hire people. Unemployment claims have also dropped, which means less people are getting laid off. A key that I will be watching on the horizon is if the unemployment claims begin to go up. A rise in unemployment could lead to a potential recession in 2024. For now, strong labor market opportunities could create more inflation worries, and that is why the Federal Reserve may look at one more potential market interest rate increase in the near future. Once the Federal Reserve decides to stop raising rates, then businesses as a whole will like that and can plan accordingly. Even with high rates, the fact that when rate hikes are done, it will become a good thing for businesses. Regarding the markets, currently the seasonal weakness is pretty normal for markets in September and for October. And the threat to equities is more along the interest rate side, and we really need to find some type of equilibrium in the bond market. Once that happens, then this should help the equity side of the market. It might be wise to consider thinking long-term versus short-term turbulences. I always say that if your income is secure, then you can weather economic downturns and the market storms, and not all of your money should be at the same risk level. Now buckets are for the next 18 months to pay bills with, and emergency buckets should be in the banks that provide no market risk. Short-term buckets for money needed to 2 and 4 years down the road should still be conservative in nature. Mid-term buckets in later years, like 5 to 10 years, can have more risk, just like long-term buckets that would be tapped in for retirement in 10 years or more. Bottom line is, the consideration is don't think of all your money in the same risk category. The shorter term needs should be less risk, and the longer term buckets can have more risk because you don't need those long-term funds now. Those are for later, and that gives them time to grow and weather the market storms along the way. Again, if you felt this information was helpful, then feel free to share it with your friends and family. Also, hit the subscribe button below to stay informed. If you have any questions on any of this, please feel free to contact our office at 1-800-381-8870 or schedule a time to visit by going on our website at strategicestateplanning.com. I'm Mark Pruitt, founder and president of Strategic Estate Planning Services. Thank you, and God bless.